I want to talk about AMC, the SPY, and my long positions. Starting today's analysis on the 4-hour chart of AMC. I'm not going to focus too much on the 1 minute. It was a really weird day today and it was a green day, but what I want to show is a longer trend. There was a fall from the $30-ish area down, and as you can see, if I draw that trend line, the price is currently breaking out of that area, and the implied volatility has stopped rising and is now waffling back and forth. The RSI, on the 4-hour at least, is starting to move, but not higher than the 50 level. So this signals to me that the consolidation has begun from this move down. What I want to do next is start to connect peaks and valleys. And I'm going to say those two peaks lead up this way, and I'm going to take the tail from this bottoming candle and then connect it to today's price action. And what we have is the beginning of what I believe is a flag. It's possible that in the short to near term future we see the price rise before it rejects and continues its consolidation. I do expect the breakout to be downwards because this does probably look like the first half of a big measured move down or of a bearish flag, one of the two. I'm going to go ahead and clear these drawings. I'm going to show you what I'm talking about in a similar portion, but in the first half of that run. This would be the run down, that first move down, and then this consolidation begins. This is the flag of this bear flag. And in these sorts of moves, the theoretical performance is to see an extension of that first leg after that consolidation pattern. And as you can see, the price didn't quite reach as low as it could have. This would have been a $13 target, and we did get into the $13 range, so that is pretty close, very close. And this is the sort of move I see setting up again, except that this smaller consolidation is forming down here and is much larger. And this 1, 2, and 3 move down, this is the first leg of a bigger 1, 2, and 3 down. And in doing that, we can come up with a price target. And this would be a theoretical price target. I'm not going to calculate this exactly, but essentially we would be taking the height of this first leg down and then duplicating it just like we did for the other one and then extending it downward, right? And when we do that, the price would be in the $7 to $8 region, this fall being from 15 to 15 approximately, right? So you take $15, well, the price is at $15. In a measured move down, or even in a flag and a half staff formation like this, it's possible to see a 50% drop or a 50% continuation of that first leg. And so I think that's what we're in for, is another drop downward. It's interesting, isn't it? I've been watching these measured move downs and these bear flags play out in smaller forms within the larger trends. And technically speaking, it looks very, very clean. A very clean, controlled breakdown of the price of AMC. So I'm still bearish. At this point, I want to say that I'm going to be moving away from day trading, and so I don't want to focus on the 1 minute chart too much. I am enjoying and having a much better experience with my fundamental analysis and picking out these companies based on their financial positions over just the technicals alone. I find that using the fundamental analysis to find companies to invest in and then using my technical analysis to enter into those trades is the best way for me to make money in the markets. I am using options contracts to help me in that process, and I think this is going to be my new strategy moving forward. Fundamental analysis to pick the stocks, technical analysis to establish trades, and options in order to achieve those goals. So that's where I'm at, and this is where I see AMC. Now let's go ahead and open up the SPY, and let me get some charts going here. Let's go blank. This is what I want to talk about. I think that the SPY is currently in a ascending broadening wedge. Let's get a bigger time interval going. I don't know, is that bigger? Is that the same? Let's see here, 4 hours, time frame, give me a year. Let's zoom out. And the price does bottom outside of this pattern a couple of times, and that's fine. In my experience, that's how bottoms behave. I'm gonna zoom in a little bit and drag it up. And what do we see? We see this lower trend line. And let's look at the RSI throughout this trend line and what the RSI is at when it encounters it. At this valley, the RSI is near 30, near the oversold area. Back here, the RSI reached about that same level before it bounced, right? And when it dropped, it's at a higher low in the RSI and continued to move up. Today I was watching a TD Ameritrade video about the RSI and how it's calculated, and I learned that volume is actually not a part of the RSI calculation. That's something that I had learned incorrectly thanks to Reddit. So if you hear me say that in one of my past videos, I apologize. Now, moving forward with this analysis of the RSI and the SPY, you can see that as the price dips, the RSI reaches that oversold region and the price bounces and moves higher. When the price is encountering the top trend line here, I'm noticing that the RSI is not reaching very far above or even reaching that overbought condition. It does encounter it right here, and that's where the price tumbles. And then the RSI moves higher after just barely dipping below that 40 area. So the RSI has been a pretty good way to read our trend lines here and decide whether or not we like where they're at. There was a deeply oversold area here on the RSI, and the price had not reached this trend line yet, and the price did bounce, but then turned lower, and there we see that encounter again with the RSI on the oversold area. So at least through this first half of this pattern, I'm very happy. You can see as well that the RSI is reaching into the overbought region as the price grinds up the top of this pattern. This is good. This tells me that this is a good trend line as well. And the price drops and then it bounces, and you can see this happening, that there was some resistance here about mid-height of the pattern. This is not surprising. These would be partial declines. To see a partial decline not play out to the upside of the bullish breakout is concerning. To see it twice is very concerning. And the second time that the price rises this high, the highs in the RSI are relatively lower than they were prior. This is a very bearish signal to see the price rising with the peaks in the RSI declining. I wouldn't necessarily call this bearish divergence right away. Maybe if I turn on the daily chart, maybe I'll see that bearish divergence. But again, it's there if you're comparing just the relative peaks. But overall, let's see here, it was back here and here. And yeah, I guess you can say that's bearish divergence. I personally wouldn't look for bearish divergence on that wide of a time scale, but it does seem to be applicable here. And it did play out. The price did plummet, and we do find ourselves below the chart pattern in the deeply oversold region on the RSI right here. And the price did pull back, and it reached that same mid-height level through that pattern. Isn't that interesting? I'm going to zoom out a little bit. I want to capture this whole pattern. Here we are. Now I want to draw a trend line that bisects this, okay? And I'm just going to eyeball it. That looks pretty good. I'm going to make a dashed line too. Now this is a capism. I haven't read anything about this, so take this with a massive grain of salt. You know, most of my analysis, almost all of my analysis is based on Thomas Bulkowski's books. Here's the one I have on hand currently, Evolution of a Trader, Trading Basics. I recommend these books almost every video because I really think it's important that people be learning from good sources. And I am journaling on my channel. This is not financial advice, I'm not a professional, but I do understand that people are watching me and they are learning as well. So I don't want to be propagating poor information. So this is a capism. Okay, here's our, we'll call it the medial line. And you can see that the price bounces here a couple of times and it provides support back here. So this is a good place to say, hey, are we bullish? Are we bearish? This head and shoulder bottoming pattern, you can see that those armpits are pretty close. This left one's a little higher. It's good. It's good. I like it. So what do we see? We see the price here towards the end failing to reach that level and turning down. And the RSI at that point is not rising above 50 in an appreciable way. The high of the RSI there looking to be at around 52.5. So that is to say, within the time that the RSI is calculated, that the gains have not really been all that bullish. And we can observe volume during this time, and we can see that it's in a falling downtrend. This was not a bullish run. It really wasn't. Overall, the price has been in a decline since this volume spiked back here when the price bottomed and then tried to jump back into the pattern, which it did do successfully, but it failed to hold. And then there was some indecision down here. So what do I think is happening? I think that what we're going to see is we're going to see the price break down and out. I think we're going to see a bust downward. We've already experienced a couple of pullbacks on this pattern. So if the SPY were to head lower, how much lower could it go? And I have that charted as well. And you can see this on the webpage I have on the right, thepatternSite.com. This is Bulkowski's chart pattern website. It's up here for free. I really encourage everyone to go up here and look at it. You don't have to listen to me. You can calculate your own price targets and do this alongside with me too. Now, this is great. He provides an identification guideline for every chart pattern. So we're looking for a megaphone tilted up, which is what we have. Both trend lines slope upward. The top one slopes more steeply than the bottom one. Check and check. The slope here is 21 degrees. The slope here is 10 degrees-ish. The volume is irregular, but trends upwards 66 to 67% of the time. Yeah, that fits the bill. Irregular, but trending upwards. And the breakout's downward 52% of the time. So we can't really say that this is a bearish or a bullish pattern per se. We are waiting for the price to signal whether or not we're looking for a bullish or a bearish target. And I think what we're seeing here is a partial rise, and this partial rise is a bearish Q, and so I'm looking for a downward breakout. And we do have his measure rule here, and essentially you're just going to use the lowest price in the pattern. And so it just depends where you want to start the pattern too. If you start the pattern here, this would be your price target, but I'm going all the way back. I'm going back a little further to capture this price action here. I really chose this level because we have this low back here, and this was the March of 21, and we have this nice measured move up, and then at this point, I think this is where we start to see this pattern form. There's a couple of indications. We can see that the implied volatility was dropping, and that there was a big volume spike down here. So yeah, I don't know. It just seems like a good spot. It really does. The RSI was in an oversold area or overbought area, and it seems that it's began to correct and stabilize here with this double bottom. This is where the price started to act more naturally from the events of 2020, 2021. So I chose to start my pattern here, and so that would make my lowest low in the pattern form from this candle, and I am taking it from a tail that is outside of the pattern. I have found that this is useful because patterns are not exact. The price is not looking to make patterns, it's really not. And so you're going to have to always use a little discretion when you're trying to find these price targets. And so this would give us a price target of $404, which is a nice round number. I don't expect the price to hit that perfectly on the head, but if I do see a breakout and down, I'm going to be looking to enter into a trade. And I think the professionals enter here. The people with the knowledge and the skill and the resources to understand what the price is doing before the public does are probably thinking right here is a great place to short, right? And you can already see the setup, right? The 1, the 2, and this, you know, and then the move down would be 3. And how far would it go? Well, if it's going to make a theoretical run that just replicates this first run, let me go ahead and make this a good height. So right about there, and I'm going to go to the bottom of the tail here. I'm going to duplicate. Let's drag it down. And as you can see, that would be at about that same price target. So I really do feel that the SPY is about to enter into another downtrend, and we will see that there will be some downside in the markets. And this is to be expected as the Federal Reserve goes through and raises rates and slows down their and unwinds their balance sheet. So I am bearish. Generally bearish on AMC and the SPY. Now there are several stocks that I'm not bearish on, and I want to share what these stocks are. The first is American Eagle Outfitters, and I did a video a couple of weeks ago, I think now, might have been last week, covering its fundamental analysis, or at least the fundamental analysis as I can provide it. I am just learning this, so I am new. Essentially, I believe the fundamental analysis is analyzing the company's ability to generate money and then comparing the stock price to the gains that may come from dividends or from the overall rise in the share price. And there's a couple of different ratios. I find that the price to book value ratio is a pretty good way to start. It's definitely not going to be the only ratio that I use, but it's really hard to find a good price to book value ratio currently, and I believe that's the result of an overinflated market, or at least as to say that the prices are too high. They are overvalued. So here we have American Eagle Outfitters, and you can see it is in a downtrend currently. And there may be a broadening, right angle and broadening formation through here, and if that's the case, we are looking at a partial decline, which is a bullish thing, but this is not what I want to show. I want to show the daily chart. I believe that the falling wedge is the best analysis here. And it looks like today we had a nice bullish tail form on the daily, and the RSI is just moving sideways. This looks like consolidation to me, just pure and undefiled consolidation, and it's coming off of this big bump up. This looks really good. I really am enjoying this. We may even be able to draw a flag, a pennant, a triangle, something in here to help describe what this consolidation is, but I'm not too concerned with it at the moment. I have been buying American Eagle Outfitters, and I am up to 50 shares. I'm looking to accumulate shares here and then ride the price higher. I'm not sure when I want to sell it or if I just want to hold it for a long time. There is a level of overhead resistance in this gap zone, and there is a price target up here as well. That'd be the falling wedge. So the technicals look really good. The RSI is in this middle ground right as the price moves through that medial line of this pattern too. You can see this through here, this midsection. If I were to bisect this, you can tell that the RSI tends to be around 50 when the price is moving at around that medial line, especially through here until it dumps. And you can see the RSI move to oversold as the price hits the bottom trend line, and again over here. And so we can use the RSI to help us identify where those pattern trend lines are. Towards the top, we can see the RSI reaching not very high, right? 57 here. What is this? 54. And lower yet here. The point being though, that as the price is moving down, the RSI is reaching relative levels, and that helps us identify the chart pattern more clearly. So I am waiting for a bullish breakout on American Eagle Outfitters, and that is based on my fundamental analysis. Now, I own a few shares, well, not a few, but let's see here. I guess it depends what a few means to you. This is GNPX. They're an autoimmune gene therapy research company. And they had some great news. FDA approved fast tracking of one of their drugs, and that led to this massive spike. Look at the volume. You can't even see the volume around it. It's such a massive spike. And the RSI dipped and dipped and dipped. And here we are. We're seeing the RSI turn around at just about that 45 level, just under 50. And it is behaving somewhat like a chart pattern almost. You can see that it would be like a double bottom with a confirmation and now a waffle and a handle, and it's going up, which is cool. The RSI doesn't behave like that, but it's interesting to see it occurring. And I have been buying the stock, and this does look good, doesn't it? Curious, this candle, right? This was also a news event. This was about one of their other drugs being applicable for the cure, or not the cure, but the treatment of colon cancer. So, nonetheless, it was good news, and the price did move up and down. There was a downtrend. That downtrend has broken, and we see the price now moving higher. And this looks really good. This looks really good. I want to say that this is a double bottom, and once the price passes this peak here, that we've confirmed it and we can start calculating a price target. But we have this incredibly tall wick from this news event, and on a technical basis, this would be the level to pass in order to confirm that pattern, but I'm not sure how realistic that is, to be honest. Nonetheless, this daily candle does look really bullish. I am happy to see that the RSI is pulling up and above that 50 level. I'm going to go ahead and zoom in on the volume so that we can get a better idea of what this looks like up close. I should not have done that. In fact, okay, fine. You win. Auto arrange. Really? Auto zoom. Okay. Here we go. You know what? Just forget it. Let's move on. On the 15 minute, I do have a couple of patterns here, and I'm going to need to pull up this different time frame in order to view them well. There was a triple bottom back here that broke out, and I was looking forward to this bullish run, but then actually that pattern busted and fell down, and now we have this double bottom, and it's looking really good. 1, 2, 3, nice measure move up, pulling above that 61.8% retracement level from this big run from that news event. This is looking really good. I'm really happy with this. I'm currently holding 100 shares and a call option in GNPX. Another company I'm holding some shares in is AUR. And this was, someone in my Discord brought this to my attention. I can't quite remember who. Maybe I can look really quick. In my Discord, I have a bunch of symbols listed, and so all I need to do is go click on that symbol and see who I was chatting to. This was Villain. So Villain brought this to my attention. So AUR, what they do is, well, they don't do anything yet. They're researching autonomous semis for trucking, basically. And I really am optimistic that the company will do well. And as you can see, this price chart looks nasty, right? Price offering, big run up, and then the consolidation, and just the biggest dump you've ever seen in your whole life. on a technical basis, this is like a whoa, that's really bad. Like, what's going on? Well, the company's not generating any money, right? They're just researching and developing. What's so exciting about this company is who is involved with it and the companies that are participating in the research. So big names like Peterbilt, Kenworth, and PACCAR really grab my attention. I have had some exposure to the trucking industry, and I understand that these are really big brands. Between Kenworth and Peterbilt, right, that's like going to be 90% of the trucks that I used to see. Now, that doesn't necessarily mean it's going to be true for everyone, but to have these big names involved with this research is very, very good. And I think moving into the future, the automation of transport is huge, right? It's going to be an amazing thing moving ahead. What, is there a candle there? There is. I can't quite see it on the preview of the video there. So today was a great day. I went ahead and I went long a couple of days ago, so somewhere back here, I think. And boom, big push up, and I don't know what caused that. I can't really say what it was, but there was some good volume here. I really am hoping to watch this company grow and succeed moving into the future. I do only have 10 shares at present because it is rather speculative, but I will continue to buy more, and maybe even I'll start using calls if that implied volatility continues to rise like that. The RSI is moving out from the oversold region, now moving up over 30, which is good to see. I really can't give much analysis on the company, but I'm just speculating here that it's going to be good. I remember in one of my YouTube comments, someone asked me to look at MMAT, I believe it was. This company is traded on the NASDAQ. I don't know much about it, so I'm going to pull away for a moment and go into the Analyze tab of Thinkorswim and type in MMAT. And I'm going to detach this gadget. I'll pull it up so that I can show it in the video too. Okay, so this is MMAT. I need to click around a little bit here to adjust my view so I can read along with you. Okay, here we go. MMAT. Let's look at their fundamentals really quick, and we'll have a little discussion about what's going on. So it looks like back in 2017, their share price started around 324, found a low of 52 cents. Almost, wow. I don't know if the NASDAQ will even list you under $1. I know the NYSE won't. Now the price rose to 750-ish before big decline. This looks like a topping pattern for sure. Probably a head and shoulders type thing. It looks like a price mountain almost. The price now falling drastically. I'm gonna go ahead and look at these numbers here. Geez, what does this company even do? There's not even a description here for me. We don't have any analysts coming in here with for Thinkorswim, which is interesting. Let's click on this. Information technology. Okay, it's trading on NASDAQ, some sort of information technology company. I'm gonna scroll down here. What's our price to book value ratio? 4.5 is high for me to consider it a value stock. The book value is basically saying, hey, if everything goes tits up and they have to liquidate, you know, how much is that compared to the price of the stock? And well, if it's high, that means that the price of the stock is higher than what the company has in assets. So let's have a look. Let's run through this a little bit. At least that's how I understand it. You really gotta study this stuff on your own. I'm still very new to fundamental analysis. I see a lot of negative numbers. Let's look at these trends. What's trending here? Operating profit margin, is that what that reads? I gotta move it over here. Operating profit margin for the last 5 years, or the last 5 quarters, I should say, has been increasing, and that's good. That's not a bad thing. It looks like it's still negative though. Geez, Q3 of 2021 was negative 2,000. Wow. Am I looking at the right thing? Operating profit margin. Huh, from negative 84 to 70 to 713, and I believe this is all in thousands. I believe. It's hard to say. TD Ameritrade doesn't do a very good job with this presentation, to be honest. It'd probably be better to look up this information about the company directly, but from what I see here, it just doesn't look very good, right? Assets to equity, 1.26. That's not terrible, right? It is higher. Let's see here, going through 2020, it looks like, wow, from Q4 of 2020, it was 2.51, then it dropped to 1.01 in the Q1 of 2021. That makes sense, and it hasn't really come up since, so I don't like that. Yeah, financial leverage, assets to equity. Looking at this, the price cash flow ratio is negative. Okay. Let's see if we get a good number for our gross profit margin. Our gross profit margin does seem to be coming up. It is still negative. That's not bad. Interesting. Very interesting. I'd have to have some context about the company to know what's going on here. Our return on equity seems to be negative still, and it does tend to be in an uptrend, although it's fallen flat the last few quarters. Let's turn this on to annual, get a better idea of what's going on here. Gross profit margin of the last 5 years is falling. Return on equity is also falling. So to see that with such a high price to book value ratio, I don't know, that I wouldn't immediately, my immediate impression is I wouldn't want to buy this company on its fundamentals. You can see the free cash flow per share in the current year, it's negative, and it's been negative. It is improving a little bit marginally, but it's still not making money. Yeah, I don't know if I would want to invest in this necessarily. Let's go ahead and take a look at the technicals. I'm going to take this high and pull it down to the low, which is way back here, and then not overwrite any of the price. And the downtrend continues. There is a short upturn trend right now as the price is leaving the oversold area. It's not unsignificant volume. Implied volatility was rising. Now it's going to be falling as the price is moving past through through this region here. Yeah, this is not a company that I would be very bullish on necessarily. So that's what I have on AMC, American Eagle, GNPX, AUR, and MMAT. Maybe I pull up GameStop really quick as well. Oh, ASRT. I want to talk about ASRT too. I do have a position in ASRT, just some puts, and I was feeling really bearish about this stock when I last analyzed it. As you can see, the price has moved above this shoulder level that I was looking for this head and shoulder top, and it's projected off of the top of this channel here. And now the price is returning to that same channel, and the RSI is looking bullish. So I'm probably going to lose on these puts, and that's okay. I didn't invest anything I couldn't lose here. The puts were really cheap. I didn't buy a whole bunch of them, but yeah, this looks like a really good bottom, doesn't that? On the 15-minute, you can see this. Whether it's a rounding bottom or a complex head and shoulder bottom, doesn't really matter. The price is definitely up. There is an uptrend here. I'm going to go ahead and steal that line and just show where that would be. It'd be here. I'm going to color it green. Yeah, looks good. So moving into the future, I'm going to be watching this trend line very carefully. You can see that the price does move into the overbought region in the RSI as it encounters that top trend line. It didn't here. This was ooh, yeah, that was bearish. Back here it did as well. So I don't know. It looks like this could stall and fall from here. Very possible. You can see the volume is in a downtrend currently. So what do I think? I think that looks bullish, doesn't it? To have like this is a half staff, kind of like a big flagpole up, right? And then we have this consolidation forming up here. If the price does reject here, we can't expect to fall. And it looks like there would be support at this point in time near this $2.18 price target. There was a pipe bottom confirmation at 218, and the price target for that bottom, let's see here. Oh, that was a pipe top probably. I probably mislabeled that because the price target is lower. So this is mislabeled. Excuse me for that. Nonetheless, here we go. ASRT is looking bullish. It is consolidating. However, a breakout below the 250 area could lead to some more downside for quite a ways. And I think that's all I want to talk about because it's been 30 minutes already. GME really quickly. GameStop. Woo, GameStop extending losses today. Nope, it was green on the day. This is a 4-hour. Let me turn on a daily. Hey, it's green. Nice. GameStop was green today. So there is a downtrend here. I think what I really want to see is this uptrend continue. And there are a lot of tails through there, right? So what if I just bump it up to the open and closing of most of those candles? I think that's going to be a little more productive. It's technically an internal trend line, but you can see the price did close above it, so that's good. And the RSI is out of the oversold region, which is good as well. Implied volatility is dropping as the price is consolidating, and this 1, 2, and 3 move, this could be, this looks a lot like AMC, doesn't it? These prices do correlate quite a bit. yeah, it's hard to say what's going to go on with these. It really is. I would hate to see GameStop continue to fall, but it could be in the same boat as AMC. Doesn't look like it's in as bad a shape. Nonetheless, I digress. That's what I got. Have a good weekend. Trying to think too much about stocks, you know. It's exhausting. I'm going to be doing more fundamental analysis on these symbols here. These are Russell 2000 specialty retail tickers: AOE, BKE, GES, PLCE, SCBL, GCO, Urban, ANF, Zoomies, CAL, CTRN, DBICH, STYLS, and CATO. So I'm building a spreadsheet. I'm going to be comparing these companies and picking out my winners and losers, and I'm going to start going long. And I want to get more into that fundamental analysis. I think maybe I do this technical analysis during the weekdays, and maybe I do some fundamental analysis during the weekends. But all right, happy trading.